For traders that have emailed and asked, the links for the free downloads are in the description box below. Just click on the link or copy and paste and put that in your browser. The 4-step method to high performance trading and the 7-step daily routine for high performance traders create the rituals, the mindset, and the winning attitude to master the markets. Bulletproof yourself with your daily routine and your habits. Force yourself to be getting better, 1% better every single day. How good can you get, traders? Again, the free downloads, the links are down below. They're both free courses. Let's get started.
Good day, traders. Stacey Burke from Stacey Burke Trading. As we're about to start the first trading day in a new month, reviewing some simple concepts and reinforcing to traders the importance of hunting out setups where you have a 90-10 edge in the market, and just being patient and allowing different instruments to trade throughout the month. And some of these trade setups, 2 or 3 scalable 5-star opportunities in a month, are significant in terms of the ability to compound your account. And we talked about the ACBs, the ain't coming backs, but just also understanding when you have a higher time frame bias in an instrument, that you may follow those instruments throughout the month because they can be the instrument or the gift that keeps on giving. Now, just to review some very simple things, we're going to look at some different instruments just to reinforce simple bar chart type of understanding that when a new month opens, we can have an open, high, a low, and a close in a ranging month that can start off with a first red day signal. We can have a month that opens, trades lower first, gives a first green day signal. Now, just understand again, it's not that we're trying to find the first green day signal. In some cases, it's going to be very obvious. Typically, we'll be looking for a market to have a pin on the bottom, And just going back through some of your instruments, we can see that in some scenarios, for example, on gold, we had a first green day in a market that was already trading higher from the previous month. We're obviously in a bullish trend. We'll highlight that. We're obviously in a bullish trend, but we had a first green day signal, pin hammer, on the very first trading day in the new month. And so that can align our thesis with the higher time frame. If we're trading gold, or if we now, more importantly, have an understanding of a market that continues to trade in the bullish direction. And as we're following that, we may have best trade candidate setups in the session that we're trading. Now, until that thesis changes on that instrument, we then proceed to allow other instruments to set up as well until we get our opportunity, depending on which setup you're hunting. In my case, I like to short things. So just by following that instrument patiently throughout the month, different instruments are going to offer different types of best case scenario trade setup opportunities. And if we get an ACB setup in the session that we're trading, potentially a scalable opportunity when it presents. But when we look at our monthly bar charts, and you can again go through your instruments and just reinforce some very simple understandings. If the month is going to continue to trade in the bullish direction, we will have a first green day type of behavior somewhere in that month. And even if it's not a situation that gives you a first green day trade, it's about following that instrument, knowing that that underlying bias is there, and there may be a best trade candidate show up throughout that month. Just reinforcing some very simple, powerful concepts that there are only 2 types of trades. We're going to get either a pump and dump scenario, whether that's over a Monday, Wednesday, Friday template, or even within a 3-session setup. A pump, consolidation, and a dump, whether it's over a 3-day template, or we can get a first red day type signal at the peak formation in a week or a month for the dump trade. Now, it's important to understand that a market can continue to trend. It doesn't have to be a reversal trade. And this is what I mentioned yesterday to one particular trader. You only have 3 options. 3 options. You either have a buy setup, a sell setup, or a do nothing setup, because it's a science project and a messy chart, and you go to the next instrument. So you can have a buy setup in a market that continues to trend. It doesn't have to be a reversal trade. It's either going to be a buy setup in a trending scenario, or we can have a buy setup in a reversal scenario. And that buy setup can be coming at the low of a brand new week. In this particular case, we're starting a new month. And as we see here on oil, it can be a reversal signal at the beginning of a new month. We may not get anything at the beginning of a new month on an instrument, and it may continue to stay inside of a previous monthly range. But understand, when we do get these types of 3-day templates in line with the higher time frame, these are the scalable opportunities, the ones that explode, they don't come back, and they go to the close of the day. Doesn't matter if it's an energy, a currency, an index, a metal, or a cryptocurrency. Understanding we can have the escalator type of activity, so contrasting a market that is going to go from the open of a market to the close of the day, and contrasting that with trading in a range where your risk reward is narrower, more difficult to trade, and certainly harder to put any size on. And I repeat the phrase, you make money on the setups and the days where it's easy to make money on, and you want to avoid the narrower, choppier, messier, sciencey types of scenarios where markets can tend to consolidate, be range bound, be more volatile, but also potentially put traders on tilt. So being patient allows us to hunt out the best instruments that are scalable. So think in simple terms, a trade setup that offers us more than 10 to 1 on our risk, that's scalable in size, that moves into profit almost immediately upon entering, and a hold till close scenario is where traders can significantly compound their trading account as opposed to trying to catch moves. Just really simple understanding. Again, Monday, Wednesday, Friday, templates in a month. Week 1, week 2, week 3, week 4. Monday's the opening range. Tuesday, day 2, typically expands the range. So what that means is this: if I'm hunting a range expansion trade, I'm looking through my instruments for which one is set up for the range expansion trade in the session that I'm trading. I might have that happen in London. I come in New York session, the opportunity has already left the station. I'm not chasing the move. But if I get it in the US window, we could have a 3-session all-in opportunity till close. Wednesday, day 3 is the midpoint range of the week. We can get day 3 trade setups. There are only 2 types of trades on a day 3, reversal or trend trades. And that resets as a day 1 heading into the backside of the week. Wednesday's day 1. Thursday is day 2 on the backside of the week. And if Tuesday on the front side can offer range expansion, I'm looking for range reversal templates on Thursday, day 2 on the backside of the week. Now, I could get a trend trade, a range expansion on a Thursday. And an example of that, which is one of my favorite templates to demonstrate that, is a Thursday on the backside, a market closing and breakout, giving a perfect ACB template for an all-in scalable trend trade opportunity in our New York window. A hold till close trend trade scenario on Thursday, day 2 on the backside of a week in a trending month. Thursday, day 2 on the backside of a week, we have an example of an explosive, perfectly well-engineered ACB template expanding the range in a trending market. And Friday, day 3 on the backside of the week is the closing range of the week. We can see reversal trades or trend trades on Friday, day 3. Again, 2 types of trades on a day 3, trend trades or reversal trades. That doesn't mean that we trade our favorite instrument and pick a direction. We're looking for the instrument that offers the setup. So it's important to be patient, allow these instruments to set up, and reinforcing a simple bar chart understanding: open, low, high, close, open, high, low, close. First green day templates, first red day templates, and markets that are range bound but can still potentially offer us one day all-in opportunities. Reinforcing a very powerful, simple understanding that you can make a lot of money on the days and the setups where it's easy to make a lot of money on. Zero thinking, zero emotion, zero stress, and zero management. Trading is a very simple process. entry, stop loss, break even level, holding till close, locking in the profits, and then walking away. There is no other analysis paralysis. There's only 3 types of setups: a buy setup, whether that's a reversal or a trend trade, a sell setup, or a do-nothing setup where the market is choppy, range-bound, and does not evolve into a well-engineered template where it's easy to make money. It's volatile, there could be major red news, and sure, yes, the experts can trade it, but I'm not interested in trying to trade a market. I'm hunting out the setup. My setup's pretty simple. It doesn't matter if I'm going long or short. It's pump and dump or dump and pump. Otherwise, I do nothing because I'm not interested in trying to figure it out. I'm just looking for the simple setups when they present. Important thing to remind ourselves of is sticking to the plan. Richard Dennis. I always say you could publish rules in a newspaper and no one would follow them. The key is consistency and discipline. And this is the most powerful point I want to emphasize today, why it's important to hunt out scalable setups, because you have to minimize your losses on garbage charts and garbage market conditions. Preserve your capital for those very few instances where you can make a lot of money in a very short period of time. What you can't afford to do is throw away your capital on science projects and soups and gaps and sweeps and hunts. Find the setups that are scalable, that can significantly compound your account, and in between do nothing. Sit on your hands and do absolutely nothing. These are the points that are very powerful for traders to understand. If most traders would learn to sit on their hands 50% of the time, they would make a lot more money. Bill Lipschutz. So 3 or 4 of those scalable opportunities are where you're going to make 80% or more of your money. The science projects are where you potentially are going to do damage to your trading account. Do more of what works and less and none at all of what doesn't work. And then otherwise do nothing at all. Jim Rogers, I just wait until there is money lying in the corner and all I have to do is go over there and pick it up. I do nothing in the meantime. Traders are the number one reason themselves of getting in their own way and engaging in self-sabotaging behavior. Learn to hunt out setups where you almost can't lose. Setups that repeat over and over and over again. Setups that are scalable in size, that require zero thinking, zero management, have zero stress involved in the trades, and zero emotion with a hold till close opportunity. And in between, if you're going to hit nail and bail opportunities, execute the trade, lock in the money, and walk away. Not hanging around, taking trades, trading 4 or 5 different instruments at once. Why take 4 or 5 mediocre trades when you can take one scalable opportunity that will return more than 10 times what a little 50-50, 30-70 choppy little science project could even possibly yield to you? Sit on your hands and wait for these opportunities. New month, new timing cycle traders, we are going to have fantastic 5-star opportunities. Be patient, be willing to sit on your hands, manage yourself in between. Don't engage in any self-sabotaging behaviors. Keep it simple, scalable, and repeatable. Have a great day, traders, and may the markets go with you.